Hello everyone, and welcome back to Trading Club Q7U. I'm your lead educator, and today we're going to take a closer look at one of the most critical concepts in technical analysis: support and resistance flips. If you're new to trading, you might be feeling a bit confused about these terms, but don't worry, by the end of this lesson, you'll be well on your way to understanding this essential concept. You see, when we talk about support and resistance, we're not just talking about a magic number that somehow magically attracts price action. We're talking about real market movements. Think of it like a tug-of-war rope. On one end, you have bulls pulling the rope up, and on the other end, you have bears pulling it down. These two forces are constantly battling each other, and when they meet, you get a resistance level. Imagine price at the 80-yard mark in an American football game. The defense is dominating the field, and the offense can't push through. Now, let's talk about support. Imagine you're on a hike, and you're heading up a steep hill. As you climb, the slope gets steeper, and it gets harder to make progress. That's kind of like what happens when price reaches a support level. It's like hitting a wall. The sellers are too strong, and price bounces back down. But here's the thing: sometimes, those sellers start running out of steam, and the buyers start to gain the upper hand. That's when you get a support and resistance flip. Let's look at an example to illustrate this concept. Imagine you're trading a stock with a current price of 50. A resistance level might be at 55, where price has consistently bounced back down in the past. This is because the sellers are too strong at this level, and the buyers can't push price through. On the other hand, a support level might be at 45, where price has consistently bounced back up in the past. This is because the buyers are too strong at this level, and the sellers can't push price down. In this case, if you notice that price is consistently bouncing off of 45, that's a sign of strong buying pressure. But what if you see a stock that has been moving upwards for a while, and then suddenly it hits a resistance level at 60? If price starts bouncing off of this level consistently, it might be a sign that buyers are starting to become exhausted, and sellers are gaining the upper hand. That's a sign of a possible reversal in the trend. Now, let's talk about common mistakes beginners make. One of the biggest mistakes is to confuse a support level with a resistance level, or vice versa. This can lead to some pretty bad trades. To avoid this, make sure you're always considering the larger trend and the forces of supply and demand. Ask yourself, is this a support or resistance level? Is it really a strong level, or is it just a minor bump in the road? Another common mistake is to not pay attention to volume when trading support and resistance levels. Let's say you notice that price is bouncing off of a support level at 45, but the volume is really low. That might be a sign that there isn't much buying pressure behind this level, and it's not a strong support level after all. For your practical exercise today, I want you to find a stock chart with a clear support and resistance flip. Study the chart, and ask yourself, what's the trend? Where are the buyers and sellers? Are there any key levels that you can identify as support or resistance? Once you've found a great example, take note of the level where the support and resistance flip occurred. Is it a clear and decisive flip, or is it more of a gentle slope? Practice making trades based on this concept, and remember to use a demo chart or paper trading journal to minimize your risk. To make things more concrete, let's take a look at a hypothetical scenario. Suppose you find a stock chart with a clear support level at 50 and a resistance level at 55. If you notice that price is consistently bouncing off of the support level, but it's been pushing against the resistance level for weeks without breaking through, that might be a sign that the buyers are tired and the sellers are gaining momentum. In this case, you might consider shorting the stock as it approaches the resistance level. Here's a more detailed example. Let's say you're looking at a stock chart for a company called ABC Industries. The chart shows a clear trend upwards, with a support level at 50 and a resistance level at 55. If you notice that price is bouncing off of the support level consistently, but it's been pushing against the resistance level for weeks without breaking through, that might be a sign that the buyers are tired and the sellers are gaining momentum. In this case, you might consider shorting the stock as it approaches the resistance level. The key to making